MemeCore is ripping higher, but the more interesting story is how tight the tradable supply may actually be. This is not framed as one clean headline rally. The supplied evidence points to a market where a live narrative is meeting a supply structure that may be far narrower than casual traders assume. The tension is whether the supported catalyst is strong enough to survive the first reaction and keep drawing buyers once the easy excitement fades. The article said M was up about 25.5% in 24 hours and still close to a recent all-time high. Only about 1.29 billion tokens were circulating against a 10 billion max supply, leaving a large gap between current float and full dilution. For searches like why MemeCore M, this is not framed as one clean headline rally. The supplied evidence points to a market where a live narrative is meeting a supply structure that may be far narrower than casual traders assume. Those confirmed details matter because they tell you whether this move came from one headline or from several pressure points landing together. Explorer data in the article suggested the largest visible wallets controlled a very large share of supply, and that some of those balances sat inside timelock or proxy rails. Float means the tokens that can realistically hit the market right now. If the visible float is tight and momentum buyers are aggressive, price can move harder than the full supply picture would suggest. Float means the share of tokens that can realistically trade right now, not the entire maximum supply on paper. That mechanism is the part traders can miss when they only look at the chart. That affects speculators directly because the same structure that can help a squeeze higher can also make the downside disorderly if release behavior changes. This is why the move can look larger or weaker than one headline suggests. In stories like this, the structure underneath the price often matters as much as the candle itself. What is not confirmed is motive. Large controlled wallets do not automatically prove wrongdoing, and wallet interpretation in the article was partly inference-based. Why MemeCore M is the phrase tied to this setup, and what is not confirmed is motive. Large controlled wallets do not automatically prove wrongdoing, and wallet interpretation in the article was partly inference-based. A market can move before those answers arrive, but it usually cannot keep the same pace forever without them. The important point is that price action and structure are not the same thing. A sharp move can be real while still resting on fragile conditions that have not been fully settled. That is especially true when leverage, concentration, or technical positioning is doing part of the work. Watch whether more supply moves out of those controlled rails, whether exchange access broadens further, and whether momentum still holds once structural skepticism grows louder. Timing matters here because the next clean signal can separate a durable move from a temporary burst. If that signal confirms the story, confidence can rebuild quickly. If it fails, the move can unwind just as fast. The broader consequence is that traders are not only pricing a chart. They are pricing confidence in the mechanism underneath the chart, whether that mechanism is supply, leverage, collateral, or narrative follow-through. That is why this story matters beyond one intraday move, and why follow-through is the real test. Watch whether more supply moves out of those controlled rails, whether exchange access broadens further, and whether momentum still holds once structural skepticism grows louder. The practical takeaway is simple. Watch execution, watch the key level or flow that matters in this story, and do not treat an early move as proof that the final answer is already known. The market still has to validate it.